Hi, I'm PNC Joe, and I only talk about commercial insurance. When running a small business, unexpected accidents can happen anytime and lead to costly legal battles or settlements. General liability insurance is crucial because it can protect business owners from these unforeseen incidents, like a customer slipping in your store or damage to a client's property. The challenge lies in understanding the right coverage needed, as every small business faces unique risks, and finding a policy that fits can be a complex process. Keep watching because in this video we will discuss these important topics. What does general liability insurance mean? Who needs general liability insurance? Why is general liability insurance important? What does bodily injury coverage mean? What does property damage coverage mean? What does personal and advertising injury coverage mean? How are coverage limits determined? What types of incidents are typically excluded? And a bonus topic at the end. Let's go through these points one at a time. General liability insurance is a type of insurance that helps protect businesses from certain kinds of legal problems. Imagine you run a lemonade stand. If someone trips over your stand and gets hurt, they might ask you to pay for their doctor bills. General liability insurance could help cover those costs, subject to the terms, conditions, and exclusions of the policy, so you don't have to pay them all by yourself. Almost every business, big or small, can benefit from general liability insurance. Whether you have a lemonade stand, a bakery, or a large company, unexpected accidents can happen. This insurance is especially important for businesses that have lots of interactions with the public, like stores, restaurants, or places where people visit. Coverage is subject to underwriting and approval by the insurance provider. General liability insurance is important because it helps protect your business from paying a lot of money if something goes wrong. It can help cover costs if someone gets hurt or if you accidentally damage someone's property, subject to policy terms and conditions. This way, your business doesn't have to close or face significant financial strain because of one accident. Bodily injury coverage is a part of general liability insurance that helps pay for medical costs if someone gets hurt because of your business. For example, if someone slips and falls in your store and breaks their arm, this coverage might help pay for their hospital bills, subject to the policy's terms and conditions. Property damage coverage helps pay for repairs or replacements if your business accidentally damages someone else's property. Imagine if you're a plumber and you accidentally flood a customer's house. This coverage could help pay for fixing the damage, subject to the policy's terms and conditions. Personal and advertising injury coverage protects your business if someone claims that your advertising hurt them. For example, if you say something about another business that isn't true, and they say it hurt their business, this coverage could help pay for legal costs, subject to the policy's terms and conditions. Coverage limits are the maximum amount of money the insurance company will pay for a covered loss. These limits are determined based on your business's size, type, and the risks involved. It's like setting a budget for how much help you can get from your insurance when things go wrong, subject to underwriting and approval. General liability insurance doesn't cover everything. Some incidents, like intentional harm or damage, professional mistakes, and car accidents, are usually excluded. This means if your business causes these problems, the insurance won't pay for them. An occurrence policy covers claims for incidents that happen during the policy period, no matter when the claim is filed. A claims-made policy only covers claims made while the policy is active. It's like when you buy a ticket for a show, an occurrence policy covers you for the day you attend, while a claims-made policy covers you only if you report any problems while you still have the ticket. If an accident happens and you need to use your insurance, you file a claim. This means you tell the insurance company what happened. You'll need to provide details about the incident, like what happened, when, and any costs involved. The insurance company will then review your claim and decide if they will pay for the damages, subject to the policy's terms and conditions. As we wrap up, I hope this journey through the essentials of general liability insurance has equipped you with valuable insights to safeguard your business from unforeseen challenges. Understanding these key aspects not only protects your enterprise, but also empowers you to navigate the intricate world of commercial insurance with confidence. If you have any questions or ideas for future videos, please let me know in the comments below.